The Indian rupee has been sliding sharply, becoming Asia's worst-performing currency this year. Analysts now warn that it could weaken even further, possibly moving toward the 90 rupees per dollar mark. This drop is more than just a number on a financial chart. It has real-world consequences for families, students, travelers, and the broader Indian economy. Several global and domestic factors are driving the rupee downward. Trade tensions between India and the United States have created uncertainty, affecting capital flows. Global investors are also shifting heavily toward the US dollar, which is seen as a safe haven in uncertain times. Foreign investor interest in Indian markets has weakened, and the outflow of funds is putting more pressure on the currency. Together, these forces are dragging the rupee lower. Currency experts are divided, but many believe the rupee could slip further. Some economists warn that 90 per dollar is a realistic possibility unless global conditions improve. Others say the currency may be oversold and could recover later. However, the dominant view is that trade pressures and foreign investment trends will continue to weigh heavily on the rupee in the near term. The weakening rupee is hitting students and their families especially hard. Studying abroad is now significantly more expensive because tuition fees, rent, and daily living expenses are all paid in stronger foreign currencies like the dollar. This means education loans are getting larger, repayment burdens are rising, and many families are rethinking or postponing overseas education plans. The same amount of dollars now requires far more rupees, stretching household budgets. International travel is becoming costlier as well. Every part of an overseas trip, from hotel bookings and food to transport and sightseeing, now demands more rupees than before. Travelers are adjusting by choosing shorter vacations, postponing trips, or switching to destinations where the rupee still has some strength. For many, foreign holidays are becoming harder to afford. A weaker rupee affects far more than individual households. It raises the cost of imports, especially fuel and electronic goods, which can push inflation higher. Exporters may benefit slightly, but only if global demand remains stable. For the Indian economy, prolonged currency weakness creates fresh challenges for policymakers and complicates efforts by the Reserve Bank of India to maintain stability. The rupee's decline is reshaping financial decisions across the country. It is influencing how families plan education, travel, and long-term expenses. And if the currency continues to fall, these pressures are only likely to grow. What do you think about the rupee's slide and its impact on everyday life? Share your thoughts with us in the comment box.